A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
All right. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. I want to welcome everybody back here in the United States and abroad after the big holiday weekend that we had for the 4th of July. We didn't have a stream last Friday because that was, in effect, a holiday, a bank holiday here in the United States, and then we had the big celebration on Saturday. So if you partook of the festivities, well done. Congratulations. I think that today is indicative of what we're going to be seeing all week long. I'm really sure that we're going into the summer doldrums. We had a little bit of fireworks on today's open with a Trump announcement, opening bell at the White House. I think that's always fascinating, the first time that's ever been done. We had a bit of a rally out of Dell stock. He was pumping Dell stock, Trump was. So you got a bit of a move there. We've got gold in rotation, down about 0.5%, but in very big-time rotation. 5-minute chart, we're going to show you the 920 EMA crossover, and you can see that there was a pretty darn good trade that came across the board a little while ago. WTI crude oil sort of in that flat spin narrative. I mean, right around 68. I'll pull up the macro technicals for you, but we knew that we had a pretty good chance to trade crude oil successfully down around 68, and that's exactly what we've seen. It just has not wanted to move as the war feels like it's been priced into our markets in total. We're also going to look at the Nasdaq 100 and the Kiwi, the NZD USD. We had a great level come into play late last week that produced big time, an absolute big time a trade to the short side. If you were interested in that, if you were involved in that, congratulations. RBNZ, going to speak a little later this week. We're going to talk about that when we set the table for the week ahead. So good to see everybody back in the room. Let's see, out in the How to Trade community, Bobby Bob. Good to see you, Bobby Bob. Ralph H. Tuku. Andrea Garwal. Welcome, everyone, wherever you may be, morning, noon, night. You know, I know that money never sleeps, and our time zones are definitely a lot different. Tina Jane, good to see you. Tina, welcome. I'm out there in YouTube land. Okay, guys, let's start off with a trade update. This is one that was a very, very good trade. No two ways about it. Talked a little bit about it on our last live stream, which was NFP Live last Thursday. If you missed that one, you might want to check that one out as well. But Bitcoin's bid from 58.5, and I had a yearly chart, a yearly number pulled up. And when these yearly numbers come into play, you really do have to pay attention to them because they're incredibly important. So what you have right here is a nice big sell-off that's developed throughout pretty much the entirety of 2026. Now, we've got sort of a yearly low in there at about 57,735, somewhere right in that area, and now we're back up around 63. So this is what I would call a layup trade. I'm not really allowed to say things like guarantee or a sure thing because there are no sure things. There are no sure things in the markets, but we know when a macro level comes into view, bidding, somewhere right above a macro support level can really be a good way to approach the markets, especially if you're not necessarily wanting to try to predict the bottom. Sort of not my business. I don't call bottoms. I don't call tops because in most cases, people lose pretty much all of their money trying to call bottoms and tops and reversals on trends. And I'm not really interested in fighting this yearly trend. I mean, we're off 27% for the year here in Bitcoin. No matter what you think about crypto and Bitcoin in general, I can see it being one of the hardest hit asset classes if we get into that election cycle that I've been talking about. So we're going to talk a little bit about that here in a second. But Bitcoin, absolutely beautiful trade. I mean, this one was good for 3,000 pips. Really nice play. Came right down. Beautiful line in the sand. When we look at horizontal support and resistance levels, that is the kind of price action that we want to see right around that zone. That's your key support zone. Go and check, bounce, boom, check, bounce again. And now you've got, a 5-day or 6-day runner to the top side. So about 63.7, so nice trade. I mean, if you got that one, well done. If not, don't worry. We're going to have more out this week. I think it's going to be a fun week to trade, but it's not necessarily going to be the most active week to trade. We're going to see rotation. The best way that I can always describe rotation is two ways that I like to judge a market when it's flat. One of them is my Bollinger Bands. When my Bollinger Bands are getting tight or they're parallel, that means the market's flat. No question about it. If there's no slope to your upper or lower Bollinger Band, it means that they're flat. The market's flat. So you got to think rotation. The other way is these time price offering charts, this market profile. I've been talking a lot about market profile lately. In my view, when we're talking about flat markets, market profile is a pretty good way to do business. It really is. We know we're going to get some good areas of trade. Your point of control area right in there. Really fantastic stuff. Nice bounce off of there about an hour ago. Beautiful topside scalp, and then we broke. And now to the downside, we're trading the bottom of value. So theoretically, if we wanted to be aggressive from this area, we probably could trade it. I think it's probably a pretty strong trade, but the beauty of this kind of market is if it breaks against us, we just get out. So if we're going to do something like this would be a bid. Let's just go bid market and send one long and see what happens here. Now, the reason why I would make that trade, the reason why you can justify making that trade is, number one, we're in flat market conditions. No question about it. Right now, WTI crude oil, this is crude oil futures, down about 0.68%. We're off, let's see, we're trading about 68.22, 68.23 right now. The market has not wanted to move. You can see exactly how tight our value area is, 68.80 down there to about 68.25. That encapsulates the U.S. session in a majority of the overnight. That is really ugly stuff. That is an extremely tight range for an intraday range. And as soon as you see tight ranges between your value areas, value area high, 68.80, value area low, 68.25, that means that life's tight. It means the market's not doing anything. And another way that you can tell that, this one takes a lot of practice. But if you're a veteran trader, just watch the trading dome. That's a depth of market. That's a trading dome. And you just watch it. If it's not moving, you know that it's tight. Tight markets can be trouble as well. If you're trying to hit a 10x or a 12x trade or trying to get a big move out of a tight market, you're going to lose. You're going to lose. Almost guarantee it. What you have to be is a little bit smarter than the average bear. You have to be looking to take a reasonable profit. Be conservative. There's nothing wrong with taking nice profits. You just don't have to take them on every trade. Something like this. Is it worth taking a shot at maybe $70? I'd say, well, is it the best trade we could put on the board? It's not a bad one. I mean, that is the key. When we get into flat markets, it is trench warfare. The market does not want to move, and you can't make it move. So the key is to take what they want to give you. Take what they want to give you. And if they're going to give you 5 ticks, take 5 ticks. If they're going to give you 7 ticks, take 7 ticks. But what we don't do is we don't sit there and say, okay, I just bought 26s. I think we're going to trade 69.75 by the end of the day. You find yourself saying things like that, you're going to find yourself losing. And the reason why I even bring this up is last week, NFP, we had a lot of new traders into the room, a lot of folks, a lot of engagement. Absolutely loved it. I always love the engagement, good, bad, or indifferent. Gentleman was asking me if we were going to see, what was it in gold? I believe the call was like, it was something huge. It was like another $100 rally in gold or $90 rally in gold. And I said, you know what? You're probably not going to see that today. Probably not going to see that today. So remember, be smart about what you do in the markets. Don't try to trade breakouts on every single trade. I've been there, done that. It's ugly. But when the markets are flat and you're conservative with what you like to do, then you have a chance potentially to make a few bucks. It's not going to be attractive. You're not going to feel like you're on Wall Street, but $50 here, $60 here, $70 there. It adds up after a while. So that's sort of summertime trading. That's a little bit of my mindset. Those Bitcoin trades aren't going to come our way every day. That was a yearly support zone and one that we really knocked out of the park. But this intraday stuff in flat market conditions, the summer doldrums, the dog days of summer, you got to be careful. You got to really be careful because I want to see you keep your winning percentage at least within the realm of reality. You can't go to a 10% winning percentage and go, okay, I'm just going to hit like 2 10Xs this summer and that's going to be enough for me. You can't do that. You absolutely can't do that. So we're sort of watching this one fizzle here. We're down about 4 ticks. I'm not going to get too involved in this trade. I don't really care what happens. I'd love to see it bounce up and pay us off. But one of the beauties of trading rotational markets is that when it breaks against you, you just get out. So right now, we're down a few ticks. I'm not overly concerned. I probably would be looking to get out if we break beneath that 20 level. Once again, I mean, we're going to be we're going to be managing these trades on real short time frame charts. So right here, we sort of bought our point of control, which is right up around 26. Now we're trading 22s. You can see the 1 minute chart, sort of real nice compression, tight compression, a bit of a break there, but our volumes are extremely low. I mean, 1 minute charts, our volumes are low. Look at, okay, that spike in volume right there, 185 hit the market. That's a sweep. Okay, so you got swept higher right there, back to break even. Markets are choppy. This is summertime trading. This is holiday trading. It's tough. It can be really difficult. Be conservative. Be smart. Don't dig a big hole. I don't think you need to be in there trading 10 lot positions on these rotational markets. Cut your leverage a little bit. Get used to the market just sort of sitting there and not doing anything. Remember, markets don't have to move. That took me a few dollars to learn, and it took me a few years to learn. I still like where we're at in this trade, though. So we're going to go ahead and wait for it to pan out, but I'm not going to sit here for the next hour or so and look at it. Let me see. Jason Maxson. What's up, Shane? What's up, Jay? Doing very well here in Montana. Had a big weekend. I'm sure that a few of you here in the United States had a big one as well. I don't know if you saw any of the festivities out of Washington, D.C. They were truly amazing. I'm not sure that I've ever seen a fireworks show that big in my life, but it was absolutely huge. I believe it's in the Guinness Book of World Records. Took a little bit of criticism on one of our other channels. I put out a video that was sort of one of our shorts, sort of a snippet out of a live stream. I put it out, and I made the point that if, in fact, the Democrats win the midterms in November, which the odds are say they're going to take control of the House, I believe you're going to see an impeachment of Trump day one. Doesn't mean he's going to lose. Doesn't mean he's going to be removed, but it means the agenda will grind to a halt. Took some criticism on that. Had some people come out of the woodwork saying that I was somehow cheering for that. Let me be very, very clear. Whoever said that, and you know who you are out there. I told you to come watch a live stream. We are traders. We're not going to the far right. We're not going to the far left. We're not even going down the middle. We care about what's going to happen to the market. We are traders. So whatever your political beliefs are, if you're a Republican, if you're a Democrat, if you're a conservative, or if you're a liberal, I genuinely don't care. This is about making money. And you have to understand that election is going to be a huge market driver later this year. And some of the policies that could potentially come out of a Democratic House of Representatives and an impeachment proceeding, it's going to bring a logjam out of the markets, and it's going to be very, very difficult to get anything done. So I did want to respond to that one message that I got out there on YouTube. I don't like doing it often because we get a lot of messages, but sometimes somebody says something that's just ridiculous, and so they need to be checked on it. Now listen, I'm not perfect. You guys aren't perfect, but be very, very clear about what I'm saying. We are traders first. We are traders first. Now, I'll give you my opinions on everything if you want them, but trading is what we're here for. That election in the fall is going to set the stage for probably the next 18 months of commerce here in the United States. There's a lot that can happen there. We're going to cover it all. A lot of markets are going to move. A lot of markets aren't going to move. Bitcoin, crypto, they're going to be hugely impacted by the results of the election. That being said, let's talk a little more politics. Trump plugs Dell at first ever White House opening bell, sends shares soaring. There's been a lot of talk about these interactions with the financial markets, and the Trump administration has not been bashful about calling out companies, about favoring companies, about talking a lot about finance. Typically, you don't see presidents talk about finance in the way that this administration has. Now, whatever you think about it, right, wrong, and different, the bottom line is President of the United States, the administration, they move markets. Look at this. Look at this chart right here out of Dell. Dell today was up about 3.84%. Really an interesting chart. And one of the things I love about reading the mainstream financial news is, number one, I disagree with most of it. I would say a vast majority of it I disagree with. But sometimes they stumble onto something that I really like. Now, a lot of you guys that have watched a lot of my streams over the years, you know my affinity for gaps. I love gaps. I qualify a gap as something that's 60 to 90 days. The longer, the better, since that price point's been traded. Take a look at Dell. That is a gap. We're rocking that gap right there from, let's see, let's go right here. Top of this bar. I didn't draw it perfectly. You know what? Let's get rid of that one, draw a better one. Something right like this. That swing low that developed, and right from that gap high, that area right there is extremely vulnerable to a pullback. Notice the compression in Dell stock, compression, and then what do you have right in here? You have a void. That high right there at the top, 327.73, and then the low right there is 357.07. There, right in there, 27, about 325 to 350. That is a juicy gap. So if you have CFD market access and you have Dell, the opportunity potentially to trade Dell, you may be able to take a short there. Let's go ahead and open up our Switch Markets MT5 platform, and let's see if we have a Dell CFD. To be honest with you, I'm not real sure. But let's go ahead and check it out. Let's go click to add on our Market Watch. Let's try Dell. Okay, do we have Dell Technologies? Yes, we do. All right, let's go ahead and add that to our Market Watch. Let's go ahead and give it a drag and drop just with our charting platform here, the powerful MT5, and there's our gap. So if you were going to trade a CFD, potentially on a Dell, what could you do? You could take that sell. How would you build this trade? Swing high, aiming right for the guts of that gap, something like that. Now, as far as your leverage go, you dial it in the same way we always do, 1 to 3% on any given trade. If you wanted to take a 5%er, you certainly could. But as far as I'm concerned, that's not a bad gap trade. That's not bad. Now, is it perfect? No, it's not perfect. Because gap trades can get away from us. They can definitely, gap trades, the caveat with a gap trade is we know it's going to get filled. We just don't know when. And when we see compression of this nature, right around that 400 level, are we going to go higher or lower? Well, today we went higher because Trump spoke. That's the power of politics. So Trump speaks, you get a nice jam right there. Still, though, this gap right in this zone, pretty darn good. High at 327.6, and then the low right there should be right around 350, somewhere in that zone. Sometimes these bubbles pop up easily, and then sometimes they don't. If you've worked with MT5 at all, you know exactly what I'm talking about. Watching that closely in Dell, though. So remember, one of the great things you have in Europe, if you're an international trader, I really am jealous in a lot of ways. Number one, you get to trade later in the day for that US Open. I'm really jealous of that. Number two, I'm jealous of a lot of your food. The bread and the pasta is amazing, and also your beers. I can't argue with your beers. Your beers are something else. But you also get CFD market access, which means you get to trade long and short on a lot of these stocks. That's something we don't really get to do here in the United States. So CFD market access, definitely a good way for you to approach the market. You don't just have to buy, you can sell. And right there, we've got the Dell short rocking and rolling. We'll see if that one cashes in. If you took it at market from right here, you're 407.92, somewhere right around 408. Is that a great trade? The location, you probably could get a little bit better location, maybe 4.25, 425, 430. But all in all, it's not a bad trade. At least you know where you're locked in. 1 to 3% on any given trade. 5%, I'll look the other way. I'll let you get away with 5%. Just don't tell anybody. That's a big risk. That's a big risk. Let me see. Packham. Good to see you, Packham. Welcome. Packham, how does it feel being in a nation where a red card can be recalled by the president? I saw that headline. I knew somebody was going to talk soccer today. Excuse me. Don't get angry at me. We call it soccer here in the United States. I know you guys call it football abroad. Yeah, the president got after the referees for the red cards. So I believe the United States is plus 140 on the money line today, underdogs against Belgium. Belgium's pretty good. From what I hear, Belgium is good. And I don't know about the United States, the depth. You always wonder about the depth. Is it up to par with some of the European teams? I don't know that it is. But plus 140 underdogs, and we'll see. We'll see what happens. I know a lot of people are going to be watching. That's for sure. But yeah, the president of the United States gets involved with World Cup officiating. Trump does what he wants. I mean, that's one thing about him. Love him or hate him. I mean, the guy does what he wants. And so that's, in one respect, I sort of give him some credit for that. But yeah. And Ralph H., exactly, we trade. That's exactly right, Ralph. You know, whatever your politics are, God bless you. Good luck. If they work for you, good luck. But if you start letting political opinions get involved in your trading, it doesn't work. You wind up being triggered, and it becomes an emotional thing, and it doesn't need to become an emotional thing. You'll find that your trading you will excel and reach heights that you never thought possible if you can keep your emotions out of this business. If you can do it, great. And listen, I'm guilty of getting involved too, emotionally involved. I am. I mean, there's trades that lost. The one trade up around 50,000 for the Dow, we got stopped out on, and then it reversed down to about 43,000. That one bothered me. That one bothered me a lot. But you have to let it go, and you just keep moving forward, and don't get bogged down in the rest of it. I mean, even I would say even limit sort of your social media, limit a lot of it. You know, what we do here, I put a lot of content out there, and that means that I'm on social media quite a bit. I'm on X quite a bit during the day, making some posts here and there. And if you start getting sucked into that world, I'm not really sure it's reality. And once you lose track of reality, then your trading will really suffer. Just keep, I mean, like the old saying, just keep it real. Keep it real, man. Just understand your goals, understand your strategy, understand what you want to do. Leave everything else at the door. When you're in front of the screens trading, it's almost like an escape from everything else. You don't have to be thinking about politics. You need to know when Trump's going to speak. You need to know when the Fed's going to speak and things like that. But you don't have to sit there and break down political views and standpoints every day. It doesn't do anybody any good, and you'll find yourself losing money. Markets don't care. Markets react to what the buyers and the sellers are doing. You know? Today, it looks like somebody bought a chunk of Dell as soon as Trump was talking. That's what it looked like. I still like that gap down there. It's a few bucks down the queue, too. So we'll go ahead and see if we can pick that trade up in the next few days. I really like it, but we'll see. We'll see how it goes. All right, here we are, week 28. Week 28. I have not been able to get those slides to not have the border around them. I'm going to have to work on that. Excuse me. There we go. A sip of coffee there. Week 28, 2026. We're halfway through it, more than halfway through the year now. We're getting ready to roll towards Q3, which Q3 is a big one. It's going to start out quiet, and by the end of Q3, it's going to be going out. It's going to come in like a lamb and go out like a lion. That's the way that Q3 typically works. It's slow in the summer, and then as soon as we turn the page to the fall months, after Labor Day, then things get crazy. Typically, we see about 6 weeks, 2 months of real frenetic trade, and that's fantastic. It's great opportunities for everybody as long as you're dialed in and ready to go. So if you were going to take a vacation, this is probably a pretty good week to do it. However, I'm going to be here, and we're going to trade. Week 28, 2026. Today was the ISM PMIs. We're going to talk a little bit about that. S&P Global PMIs and the T-bill auctions. Not really a huge news day. Still a lot of people out they're out. They're still on vacation. I see a lot of them hunting and fishing, and not hunting, but this time of year, but fishing, camping, still enjoying the America's 250th. I expect it to be slow all week. I really do. Tuesday, quiet. Not much at all for an economic news event dropping Tuesday. So I don't know. We're probably just going to have a strategy session, talk a little bit about the RBNZ. That's going to be breaking early during that Wednesday session. RBNZ interest rate decision. We're thinking a rate hike, 25 basis point rate hike. Now, we'll have more of that promo for you tomorrow. But really the Kiwi, when we start talking Kiwi, this was an absolutely fantastic trade that we had last week. We had a sort of a hot discussion about which way the Kiwi could go. And there was a few folks that were holding longs, and I said, that's fine if you're holding longs. Beware of 5,700. Beware of 5,700. It's right there in the live chat over at the How to Trade community, howtotrade.com. Free subscription. Show up and get one. But we put it out. I said, listen, if you're holding longs, you got to be ready for 5,700. You've got to be ready for 57 and a quarter. What was the high? On Friday, it was 57.27. Since then, significant reversal. You're back down to 56.96. Had a nice sell-off earlier today, 56.76. So we're going to be watching the RBNZ closely early on that Wednesday Forex session. Now, what that's going to mean is we're expecting a rate hike out of the RBNZ. We're expecting a 25 basis point rate hike from 2.25 to 2.5. Theoretically, that's going to bring bids to the Kiwi. Now, the question is it already priced in? In my view, yes. I think the only thing that's not priced into our markets right now is Kevin Warsh and the Fed and what they plan to do. So that was a big time zone. If you're interested in trading 57.16-ish, pretty good area maybe to play topside resistance. It's also the high today, 57.14. So that's an incredibly valid level. I would be dialed in from that zone. I don't know that I would be taking bids above 5,700. Not yet. Now, once the market breaks, if the market does break above this zone and then we get a bit of a rally, maybe 57.50, yeah, more than likely. Yeah, and then maybe 57.73. As of right now, I think that's your premium trade on the board. You know, if you were going to ask me what a high probability trade looks like for this pair the rest of the week, we've already really capitalized on that sell twice from right around 57 and 57, not and a quarter, but 57.16, 57-ish. That zone right in there is getting saturated. So remember, the more times we test that level, pretty much the more we get all that sell side liquidity eaten up. And that means that we could potentially be in for a breakout at some point in the near future to the bull. Be ready for it. Absolutely be ready for it. You definitely don't want to be caught short if we do break above 57.16. So that's what I would say. Love 57.73. Coincides with 57.75. More than happy to step up and take the short there. I really like that play. 62%, one of my favorites. Absolutely one of my favorites. So if you're interested in that level, yeah, I don't know that I would ignore that one as well. Right this minute for gold, what do we have going in gold? 920 EMA crossover strategy. This is one of the more popular strategies that we've done over the years over at How to Trade com on YouTube. Go ahead and check out all of our materials. But this right in here, there's your 9. Your 9 crosses over your 20, and now you're moving higher. That's a 5-minute chart. Pretty good trade. Little bid down there from 4,143 all the way up to 4,156. Not bad. Little $13 move for a flat, what I would call a static trading day for the XAUUSD spot gold market. Not bad. Up about 0.5%. Not bad at all. All right, guys, let's circle back around and see what happened. Well, we got paid, right? We got paid. That's just sort of this is the way that it's going to work, guys. When you're trading rotation, a rotational trade, I don't know if anybody remembers that one, went right down to the bottom of value. What was our low? Our low traded right down to 68.20, and then we bounced back. This type of thing is absolutely critical that you understand what it is and how it functions in rotational market conditions. Bottom of the value area low, value area high. That's where a majority of this business has been conducted here since the market opened yesterday, and that's where that's the vast majority of the highest price point. The price point with the most volume. How's that? It's called the point of control, and there it is, bigger than life, right there at 68.63. So what does all this mean? That means that we did a ton of business in a phone booth. An absolute phone booth. There is no move there. There has not been a move there in WTI crude oil today. We'll look at the macro picture at USOIL before we sign off today. That's a pretty good trade. A pretty good example of how you can trade dead markets. It's a dead market. Do you trade breakouts in dead markets? If you do, you're going to struggle. Start getting used to reversion to the mean strategies. Start getting used to rotational market strategies, flat market strategies. Those can really help you. They can really help you in the next probably 6 weeks. Now, not every day is going to be like this. It's not going to be this slow. It's not. But I would be ready for some slow market conditions. That's for sure. Now, we're going to look at the Nasdaq 100 in here in just a second. That's a market that is not slow. It's definitely moving higher and higher. We've got some interesting levels coming into play. So let's see. Thursday's weekly jobless claims. I'm not expecting much to happen there. I think we're just going to get a good day of trading in, a little bit of volume. I would say on a Thursday, probably more on Thursday than Monday today. Tuesday, Wednesday, Thursday, those are my best days traditionally. There's more action. Business is due to pick up. We just have to be patient, but it's not going to pick up like it did in the spring, and it won't pick up like it will in the fall. So right now, we're sort of starting to change the way we think about the markets a little bit. We'll talk more about this in different ways to manage these things as we roll forward through the summer. But, as you just saw with the market profile, maybe we'll introduce some range number concepts. These slow days can be very good. They can be very good. You just are going to have to sort of tweak what you think about breakouts and trends a little bit. You don't want to trade trends when there's no trend. You don't want to sit there and wait for a breakout that may or may not be coming. Most frustrating thing in the world, I did it for years. You can still make it work. It can still be good, but it's not as good as just taking what the market will give you. All right, Thursday weekly jobless claims, not really interested to me. I'm not. We'll look at them, though. We might as well. Let me see. Friday, the Canadian unemployment rate. That might be interesting. We've had sort of the U.S. dollar, Canadian dollar on our radar for a while. Now we're trading up above 142, but an absolutely flat market day. So maybe we'll get a little juice out of the Canadian dollar, the loonie, on Friday. We'll certainly be watching it as the week unfolds. All right, Monday psychology. What should we be thinking about today? Remember, Mondays are for generating momentum. We've got to get out of the starting blocks. If you've ever watched a 100-yard dash or 100-meter dash, you've got to get out of the starting blocks. Now's the time to do it. What do we do on Mondays? Understand most Mondays are slow. That's exactly what we saw. How do we deal with it? Primary objective for us is to get in the positive. Let's get a few green ticks or green pips and then get ready to roll into Tuesday's session, looking more for our P&L goal for the week. Don't go into a hole. I highly advise not taking huge leverage trades on Mondays. I don't like to see that because if you dig a hole on a Monday, you're going to be sitting there fighting back, trying to get the break even the rest of the week. And by the time Friday rolls around, you're exhausted and more than likely you're at break even or maybe still a little bit negative. Stay in the green. Don't let Mondays get away from you. Be smart. Now is the time to generate momentum. We're getting out of the starting blocks. That's what this is all about. We got to get going. We got to get some momentum going. The best way to do that is to get into some decent trades. No borderline trades on a Monday. No low probability setups on a Monday. We save those for Thursday after we've already made some money. You want to take a shot at a 10x payback, low probability on a Thursday? Do it. Go for it. You'll have my blessing. On a Monday, we don't do that because we don't want to start off in the red. Focus on analytics, game plan for the week ahead. That's what we're doing right now. We've got our key events lined out. We know which markets are going to be moving. Monday's a great day to be doing that. Generate momentum. All right, let's get it going. We want to get things going. That's important. Get the ball rolling. Get out of the starting blocks. That's what it's about. On Fridays, we preserve momentum. On Mondays, we make it. Tuesday, Wednesday, Thursday, we get it going. So today's an important day. Mondays are an important day. Monday sets the tone, and momentum builds the week. It's that simple. It really is that simple for Mondays. Don't get too carried away and don't go into a hole. That's a little bit of psychology that I've developed over the years. It's served me well. Where do you think psychology like that comes from? It comes from showing up and losing $2,000 on a Monday and sitting there going, I got to fight back the rest of the week to get it all back. I don't do that anymore. It's too damn hard. It's too hard. All right, news of the day, S&P Global Services PMI. No disrespect to the people over at the S&P Global Services or the ISM departments. These are think tanks. These are what we call academic numbers. If you're an economist, you need to learn them. We're not economists, we're traders. We're not politicians. We're not talking head, and we're not talking heads in the culture war space or whatever you want to call us. We're not any of that. We're traders. Do these numbers mean anything to a trader? By and large, no. What we need to know about our economic numbers is, do they drive market participation today? These haven't moved the needle at all. They just haven't. Let's take a quick look, though. S&P Global Services PMI a little bit beneath expectations and the previous release. The composite PMI down a little bit, 51.9. That's beneath expectations, but above the previous. ISM, non-manufacturing prices paid. That's interesting. That's an inflationary metric. We're talking about prices paid from the manufacturer, from the service industry. Boy, I already got those mixed up. What does that mean? It means that prices are still trending higher. Down from the previous release, more than likely because fuel costs are down a little bit as well. Oil's down. Gasoline prices here in the States are down a bit. That's the reason why you got the bit of a pullback from the previous level, but still above what we expected. So inflation, very, very much a key part of the equation still. ISM non-manufacturing PMI, what do you have here? 54, that's beneath expectations and the previous release. So essentially the service sector beginning to contract just a bit. And then your non-manufacturing employment, you're still, I guess you're up a little bit. I just wouldn't get too carried away with these numbers at all. The rest of it, we're going to skip it because it just gets into the minutia of the actual ISM numbers. This one I view as being more important. These are your 3 and 6 month T-bill auctions. These are important. They're important because when the T-bill yields go up, that means that the institutional investors are sort of expecting interest rates maybe to go up, Fed policy to get a little bit tighter than it is right now. So when we look at something like this, I say, yields are down a little bit. I'm not getting too carried away at the 3 month. 6 months interesting, 3.830, and that's down just a shade from last week's 3.840. So big picture, T-bill yields are down a bit. So maybe our rate hike expectations aren't as big as they were last week. And we could say that may be because of our lighter NFP number. It wasn't a great NFP number that we had Thursday, down a little bit. And then also your oil prices are down. So we can build a case that maybe those rate hikes, multiple rate hikes for later this year, maybe those aren't as sure of a thing as we first thought. It's all food for thought, guys. We got to just stick in there and sort of just ride this logic where it takes us, because you got crude oil prices are way down. Fuel prices here in the States are coming down, and they're coming down in a hurry. That's kind of rare. Jobs numbers, about half of what we expected. So all of a sudden the pressure's on the Fed maybe not to hike interest rates. We got to wait and see what Warsh is going to do. No question about it. That's a significant play, what he's going to do later this year. That's for sure. Let me see Joshua. Hello, Shane and everyone. Hello, Joshua. How are you doing? Let me see. God bless. Absolutely. Bless everybody watching. May you have a great day and great week of trading. That's for sure. Let me see. I've got a few questions here in the live chat. We'll hit those, and then we're going to get the NASDAQ 100, and then I want to pull some macro levels for your gold market, which is not overly attractive. Then we'll look at USOIL as well. Dell's coming off a little bit. Maybe we're onto something with that Dell play, right? Let me see. Packham, do you hike the mountains during the summer times? Yeah. Try to get out. I don't get out near as much as I used to, Packham. I used to be always in the woods, always hiking. Fishing. Mostly this time of year, it was always fishing. So we would always be fishing the rivers and the creeks. It seems like everybody else is fishing now except me. I'm in here in front of these damn computers. No, I keyed. No, I like trading, but it's all. This time of year, I used to take 2 to 3 weeks off and just go fishing. Friends would come into town from out of state. Friends and family would come into town from places like California. They come in from, back east further. Which states were those? Yeah, Iowa. Let's see. We had some come in from Iowa, Minnesota. Those guys would come into town, and then we go fishing. So don't do that much anymore. Unfortunately, we all have to grow up, and I just couldn't spend my summers fishing and working construction. So now we're sort of doing this in the markets, but that's okay. That's okay. I'm not complaining. But no, I don't get to go hiking near as much as I used to, and I miss that. That's for sure. Let me see. Odin. Hello. Will Bitcoin go to 70,000 this week? We talked a little bit about Bitcoin to open. We had an absolute great trade here, 62% on a yearly, just to sort of recap where we've been. You can see somewhere right in here. You're looking to get that big pop. So what you're saying is, do we go to 70 this week? Man, I don't see it. My own personal opinion, I really see some real negative stuff creeping into the crypto sphere, and a lot of it has to do with the election. The stories about the Trump coin and a lot of things that the Democrats and the left want to do to crypto and crypto regulation. Those may be closer than we think, especially if the left wins the election there in the fall. So I really see I see crypto as being one of the big losers potentially for the rest of the year. But that being said, I mean, as long as that 58.5's in play, you still sort of have to favor the long side of this market. So what your question is does it go to 70,000 this week? 70,000's right there. Personally, I don't believe so. I think you're going to do a lot of this week. However, you could definitely get those bids and see just a voracious rally if in fact that happens. So in short, no, I don't believe so. And we'll circle back around. We'll be covering Bitcoin all week. Let me see. Packham. How will the planned increase in production by OPEC affect the markets? Well, I mean, it's all designed to essentially put a lid on oil prices. Now, you'd say, Shane, why does OPEC want to put a lid on oil prices? And I say, well, they don't. OPEC wants oil prices high. However, I mean, if you still have that log jam in the Strait of Hormuz, I mean, shipping has to get back to normal there before any of this oil. They can boost production all they want. But if you can't get it out of the Gulf, if you can't get it out of the Persian Gulf and get it global, then it means the production means nothing. Now, remember this. Last thing I'm going to say about this OPEC. This is a delicate situation. Remember the Emirates, the UAE, they left OPEC. So you got a riff here with the Emirates and Saudi Arabia, who is sort of the backbone of OPEC. Plus, you've got Iranian interests. You've got the United States still trying to pump and get as much as they can out of the ground. So if you're going to increase production, okay, is that going to be bearish for crude oil? Of course. But it's only bearish if you can get it out of the Strait. If you can't get it out of there, then it doesn't mean much. And the other thing is this. Remember, they cut production because there was nowhere to put the oil anymore. So this increase in production may just be getting back to pre-war levels. So I would say the jury's still out on if that does anything at all for the markets. But right now, WTI crude is at about 68.50. We're going to look at it right now. Let me see. So I hope that answers your question a little bit, Pack-up. I think that it's going to be a pretty good time to be trading crude oil here. Not necessarily right now, but we could build a bullish case for it going into the fall months and the winter months. All right, so there you go. Point of control, we could take another WTI trade right up there, sell 68.62. Remember, in a rotational market, your point of control, not as strong as it is typically. What you love to see out of a point of control is a nice big bullish rally and then like a pullback so you can buy from that area, maybe with convergence with a Fibonacci or a moving average or something. We don't really have that today. What you have is a flat market. So we're going to go ahead and get away from our TPO charts here. Let's go ahead and look at US oil. Remember, I would not have TPO charts on my US oil. I wouldn't have it. And the reason why is it's an OTC market. It's a CFD product. You don't know exactly where the volume is. So take a good look at that 30-minute chart. Take a look at that. That's rough. Market's not doing anything. It's ebbing and flowing. It's going up to your upper Bollinger Band, to your lower Bollinger Band, back to this level right here, which is right around 68.78. So let's go ahead and back this off and see exactly what this level means. Weekly chart, if you guys remember this, I put this one out a lot over the past several weeks. We referenced it a lot. What's happening right now? Our opening war gap is getting filled in, and it's being filled thoroughly in. You can see last week's low. I definitely have that marked on your chart for US oil. Last week's low right around 67, 67.04, somewhere in there. What's that top? What's the bottom of this gap? That high right there is about 67.83, and the low right there is 69.20. So this gap has been filled in. Three rules of commodity trading. Gaps get filled, gaps get filled, gaps get filled. That is exactly what happened to that opening war gap, an absolute thing of beauty. So the question now becomes, do we settle down here somewhere? Do we trade in this area for a while? Well, it was sort of the idea that I put out there last week, especially after this trade came to fruition. You can see how strong that zone was. I mean, just to blow this up a little bit for you, look how strong this area was. That is your 78% retracement, 68.79, and that coincided perfectly with that opening war gap. And look at what it's been. Support, compression, break. Little bit of a hammer formation. Still, though, this zone right up in here, you got to respect it as topside resistance, even though we're just getting saturated at this level. So the gap has now been filled in, and the question is where does the market go from here? We can build a case to buy it, The problem is your trade location. Is it that great? No, it's not. You're buying right at that level, which once what once was support, probably now resistance. So you got to be smart about what you're doing here in the U.S. oil market. So something like this, you're looking at 68.79. Right now you're trading about 68.44. Might be a late day sell scalp for you. But if you do get a close, if we get a nice close this afternoon up above the 68.78, maybe we get something up over 69. There's probably going to be some longs come into the market. And why wouldn't there be? Why wouldn't there be? Interesting stuff, guys. But for me, WTI crude oil, an absolute key level, though, that you really need to mark on your charts is you've got to have last week's low marked. That could potentially be a launch point to the bear. Remember, there are going to be longs in here. There's going to be retail longs. So we're looking right there at that low, 67.04. So you're going to probably see a rush of stop losses underneath 67. But this zone right here, very important. If you take that out, you're probably going a lot lower. So be very careful with what you're doing if you're holding longs. And there's a lot of retail traders out there holding longs. They know you're one headline away, one Iran-U.S. headline away from the market exploding to the top side and getting back up around 72.50, 75. I don't disagree with that. The problem is from a technical standpoint, when these get washed, if we trade down, and it's just not that far down there, if we trade down and take a look beneath this zone, there's a very good chance you could see a washout maybe down to 66, 66.50, 65, and then we're just in a complete bear. Then we're just in a bear market, which we sort of are in now. And then you start looking at these zones down here. Can all of these fundamentals line up to take crude oil back down to $60? That's what's being debated right now in the market, and people are doing it with their pocketbook. So if you're holding longs, I get it. It's not necessarily a bad thing to do. If you wash out 67 and you wash out last week's low, you probably got to run for the hills. Make a temporary retreat. Temporary. All right, Nasdaq 100. That was one of the markets we wanted to cover this week. Key number 30,000, still relatively important. You can see we sort of took a peek above there. This is a 12-month look. This is the Nasdaq 100 going back to 2017 and just absolutely exploded. Right here, you saw January 2022. That was pretty much a pullback. Since then, you've just been on an absolute explosion of the top side fueled by the AI trend, the AI bubble, whatever you want to call it. Let's take this down to a daily chart. So what do we have here? Well, we sort of had this 30,000 level. It was pretty good to us. There was a couple of nice scalps in there to the short side. Now we're just sort of winding around. And as far as I'm concerned, you're in rotation. Now, even though we look at the NAS 100 and what are we, even on the day, which isn't great. NASDAQ futures are up significantly, up about 1.18. And then you also see the NASDAQ index up 1.14. So it looks to me like there may be some sort of tracking error here in the NASDAQ 100, or potentially you just see maybe the charts are just not quite in sync. But you can see the NAS today a little bit flat. Take it to a 30-minute. So you got a little bit of a rally right there. Opening bell, ding, ding. Not much going on here. Let's take a look at NASDAQ futures. Let's go to a daily. Just opened a little bit higher. That's all. That's probably why. Well, that's why you have the discrepancy. Just opened higher on the week. So somewhere right in here. Let's see. My guess is there's a tracking discrepancy because last Friday they probably lumped all this into one session. If I had to guess, a lot of times with holidays they'll do that. So what I'm looking at right now is you're saying, okay, how am I going to trade this NASDAQ? Well, it's a futures market, so we can go back to our TPO charts. So what do you have here? Point of control. Value area. Look how tight the value area high and the value area low is. It's a flat market. So if we're trading flat markets, potentially you could bid the value area low. You'll notice that value area low lines up with what we saw back on the 2nd of July, which would have been Thursday, NFP day. Same. So that tells us not much volume at all came into the market Friday. And today, been kind of light too. So what could we do? Definitely could be a bidder down here late in the day. 29,770, something like that. Nothing wrong with that. If you wanted to sell up here, I would say you probably could if you wanted to. Do you buy the point of control right now? I would avoid it. It's getting a little bit sloppy in here, a little bit messy. You'll notice that this tail is significant. You just sort of took that out. Now you're getting a nice bounce, but as far as trading this intraday, late day, I don't think I would be doing that. Let's go back to the Nasdaq 100, have a look at, don't necessarily want to look at TPO charts for that because of the volume data. Let's back this off to say a weekly. Okay, so you've got the key number right there at 30,000, all-time high. We've sort of been peppering that area, 30,758. So what do you want to do with this? Well, there's a couple observations that I would make. Number one, inside week last week. Big negative week, 4.25% to end June, to open, or the first few trading days of July, coupled with like the last trading day of June. You saw a bit of a bullish run, about 2.31%, but it's an inside week. So that means you're watching last week's highs and last week's lows closely as a potential breakout may ensue. In my personal opinion, you're probably more than likely going to see an all-time high, a new all-time high, as opposed to seeing this market really break to the downside. So, I could give you a support zone. Potentially you could look at to buy. We're just nowhere near it. We're nowhere near it. It's down in here somewhere. Wouldn't even worry about it yet. 30,000 right now. That's the big deal. That's the level that everybody's trading. The buyers have an opinion. The sellers have an opinion. What happens at 30,000? Well, I don't know. We'll see. For me right now, I would be on the sidelines for the Nasdaq 100. I want to see this thing move. I want to see a price get into, sort of an area of disequilibrium. That low right there, 13-week EMA, 28,675, somewhere in there. Okay, maybe we could talk about bidding that, but that's 1,000 points down the queue. I really would wait and let this market set up. There's an old saying, fools rush in. I'm in no hurry to rush into the Nasdaq this week. I want to see something happen, make this thing break one way or the other, and then we can react accordingly. All right, let's take a look at gold. Sort of my macro view towards gold. Very simple. Very, very simple. We're not trying to reinvent the wheel here. You can see sort of a nice bullish start to the month, 3.77%. A lot of that had to do with the weak NFP number from last Thursday. Saw a significant bull run there in gold. But you'll notice that our analysis is really starting to bog down. There's not really much new going on in this market. So macro look at your levels, 37, love 37. Could we maybe sell? Could we look for a sell? I'd say, yeah, you probably could. Let's go to a weekly. It's just you'll notice the market structure right here. There's sort of a spike there. Just peaked above the last week's high and then absolutely hammered it. You did it again there. I don't like it. I just don't like it. I don't like it. And to me, when you don't see the symmetry in the market, it means something's going on that maybe isn't that great. A daily chart, not interested. Maybe bids 4,075, 4,080. Maybe bids from down here, that macro level. It's only a 50% level, though I don't love it. Maybe selling up here somewhere, 4,400, 4,500. Yeah, we could make that case. We're just nowhere near any of these levels yet. We're nowhere near them. So to me, there are a lot better things to be trading than gold right now. That's just my own personal opinion. Let's see if we can get a monthly going. Let me see. Bobby Bob, US dollar, Japanese yen. Yeah, let's go. We'll look at the dollar yen here, and that'll be the last market we cover today. Maybe something like this out of gold. Spike high there. Maybe right off of that spike low. You sort of have that real dirty area right in there, 44.37 to 45.07. What I would probably be doing is be looking for your sell right around 4,500. It's a decent trade. We're nowhere near it, $350. Let me see, Ralph H. It looks like a twin pin bar on the weekly for gold. Let's have a look. Yeah, it's not a bad observation. This right here, I would love to see if this tail was just a little bit up in here, just a little bit more, that body was real tight like that, I would definitely be diving in saying that's a hammer. Not quite a hammer, but a pin bar. Yeah, you get back-to-back pins. They're almost dojis, very, very close. So, I mean, that right there, if you were interested in taking that as being a potential reversal, like I said, I don't mind the trade. Just you're going to have to stop yourself out down in here. You're probably best suited to take a retracement down there, 4,083, somewhere in there. That wouldn't be a bad launch point to the top side. If you were going to take a weekly position trade, I would probably wait. I would wait for a pullback there. Because really, I mean, your out is obvious. You're going to have to stop yourself out down there, and that's a pretty big risk. A pretty big risk if you're looking to risk, maybe $250 on it. You got to take your leverage way down. That's a lot of ticks. That's a lot of ticks. All right, let's go ahead and hit the dollar yen. We'll hit the dollar yen with a couple of different strategies here. The first one we'll go with is just the basic Fibonacci's that I work with pretty much every day. So what do you have here? You got key level of 162. Nice big. I mean, that right there is just a big action. Big action. Huge washout there up to about 162.84. Then we came back down, and now we're back on the rally up about 0.5% up above 162. So if I'm doing this, what do I need to do to succeed? Let's go to a daily. To me, let's get rid of all our lines. Doji, sell-off, big sell-off on NFP day. Then you've sort of got that daily hammer formation where you're just heading back to the top side of it. I mean, I hate to do things like this because your trade location really isn't that great. But like, let's say you really wanted to make a trade here. Let's say you really wanted to make a trade on the dollar yen, and you said, Shane, which way, bullish or bearish? It would have to be a buy for me. It would have to be a buy. You're above 162. Nice big sell-off here. Now you're building back that bullish momentum. Stop loss, you can put it beneath this area right in here, and then maybe look to grab a take profit somewhere right up in here. 164.06, something like that. Maybe you want to shoot for 165, something like that, 164.78. It's a higher risk trade because the BOJ is watching this closely. This is a higher risk trade. However, we have reason to believe that we're headed much higher, and that's because that 162 level's gone. The fundamentals here really point towards the trend continuing, even though we could say the BOJ is going to hike rates and the United States may not hike them as quickly. What does that necessarily mean? It means that we should be coming off from that 162 level, and it is not happening. That was the intervention. That was the BOJ rattling their saber. Remember all those news items that hit during NFP day? That's where it was, and now you're back on the rally. Shane, what do I do, long or short? And I go, well, I can't tell you what to do. You got to figure that out for yourself. To me, long or short, long. You'd have to go long because the trend's up. 162 sort of out of the way now. I think I'd much rather be long than short. That's my opinion. We'll wait and see what happens, though. As far as your technicals go, though, on this one, Bobby Bob, it's really a challenge because you'd be looking at this going, well, what now? Well, you're trending higher. 162 seems to be in our rearview mirror. We traded it a lot. What could we maybe be looking at? Probably 165-ish is being a legitimate topside target. We read it last week. That level was all over the news. It would not surprise me if we go up and test the 165 zone. Do we do it now, though? Do we do it in the summertime? That I really couldn't tell you. It's not typically a good idea to buy the tops of markets. So we are very near the top of this thing, 163. Do we keep moving higher? I think we do. I really think we do. However, strong risk management. You do not want to risk everything on a trade like this. Just understand, probably beneath this spike low, you're going to have to get out. You're going to have to get out. All right, let's go ahead and take a look at how this would develop here on this 920 EMA crossover. Really a fantastic type of a trade. Trading strategy for that 4-hour chart. And this would be sort of what I mean. I mean, right here, you got the big plunge, the big sell-off that we saw on the 1st of July to open the month, and we flatlined, and then we got the big rally here, and there was your bid signal. 4-hour chart, 920 is pretty good. So if you wanted to take a trade based on this strategy, is it best to take it right now, or do you want to wait for a bit of a pullback? Well, a lot of folks have come to me and said, Shane, I noticed that these things pull back to the moving averages religiously. It's almost better to wait to go long from the moving averages. And I would say, yeah, it's not a bad idea. If you want to be patient, you can go ahead and do that. I don't have a problem with that. Maybe you wait for a Fibonacci trade. Somewhere down here, 160, 168. It's a heck of a lot better than what we just did, just putting a market order in. So if you want some structure, there's definitely a buy signal here, but, it may be best to wait for a pullback. Maybe best. Hard to say. You got to figure that one out for yourself. That's what trading's all about. If you want to wait for pullbacks, do it. If you want to go in there with market orders, do it. Just manage your risk. Be smart. Don't dig a huge hole on a Monday. And then Tuesday, Wednesday, Thursday are going to be a lot of fun. Let me see. We got a few questions here. Clem, any opinions on silver? Yeah, let's go ahead and take a look at silver here real quick. And then Hannah, okay, B. All right. Good to see you, Hannah. Welcome. All right. Any opinions on silver? Well, from a broader perspective, what can we really say about silver? We could say it's been on an incredible roller coaster. Daily chart, we were really looking for 50. I thought we had a great chance to get a shot at 50. You can see sort of a support zone. Long term, this will be a monthly level. We'll look at our weekly chart to sort of show you. But right there, 48, that 78% level on the monthly gives you a really good look at downside support, a very serious level of downside support, 48.29. That's right around 50. So we were looking to bid 50s, 52, 50, somewhere down in there. Absolutely loved it. You can see that last month's low was right down there at 55, 59. I thought we had a really good chance to get that towards the end of June, and we didn't get it. Since then, it's been about a $6, $7 bounce. Key level right there is 63.97. So 64 to the top side is definitely an area that I would look at. I wouldn't get too confused by what's happening, though. Realistically, significant selling, compression, sort of broke to the top side. That could turn out to be a significant area of resistance right around 64. So if you went to, say, the weekly, once again, I don't care for the structure, sort of like gold. I don't really care for that stuff. I like to see nice big runs with symmetry involved. You don't really have great symmetry there. You got sort of a spike high there. Then we broke down, and then we kicked above that doji right in here, and then came off further. It's just really a challenge for me to put my finger on what's going on. A lot of fake outs in there to the top side. So what can we do here? We could build something like this. I don't like 50%. Never have, never will. However, when it comes in and coincides with one of our longer-term levels, I think we have to respect that area. The question is the sell side liquidity there for us? I think so. 63, 68, somewhere in that zone. Potentially this area right in here, 63.95, 64-ish. Could be a nice topside resistance zone. So to answer your question there, Clem, if I was watching silver, top side of this market, I'd be looking between 63.75-ish and 64. That should be significant resistance. Now, if that level does not hold up and it doesn't get the job done, then we may be back for another run at 75. Could happen. Silver is different than gold. It is. It's a Captain Obvious statement, but it's true. Silver's been trading with incredible velocity really for the past, year? And definitely since January 1st. First 6 months of this year, silver's been trading with some velocity. So you're going to want to be, I won't say cautious, but you just want to be smart about what you're doing there. You really do. You want to be smart about what you're doing. Wait for your locations. Make sure your trade locations are good ones. If you do that, you're going to be okay. All right, let's go ahead and check in on this short that we put on here. All right, we made a couple of bucks. You can see we're trading right around, let's see, Dell trading right around 403.50, something like that. And our profit target is going to be down there somewhere at, let's see. We only did that with one share, so leverage is really low. But somewhere like right around 328. I don't believe that's right. Let's go back to my other chart. So if we were looking for a legitimate profit target here, we're somewhere right around 350. That's a conservative target. That's a conservative profit target there. If you wanted to try to stretch out this short, maybe 331, something like that. Still could be a pretty good trade, more than likely going to be a swing trade. So if you're going to hold that CFD through the daily close and through the overnight, you're going to have to know all about your swap fees and your swap rates and how much it's going to cost you. If you're trying to do something like this on just the stock market, you're going to have a broker that cooperates with you that will extend you some leverage and let you actually short. That can be problematic. Typically, you have to have a few bucks to do that. So I'm jealous. I'm jealous of you CFD traders that can get in there and take trades like this and not worry about it. Let me see, Clem, it's very frustrating with silver. Great analysis. You're absolutely welcome, Clem. It's my pleasure. All right, guys. What do we do now? Where do we go now? What do we do now? It's like the old Guns N' Roses song, right? Where do we go? Well, we go right here. We just are smarter about what we're doing leverage-wise. And the biggest thing, if I could give anybody a piece of advice out there, and it's not financial advice, when the markets calm down and they flatten out, your risk versus rewards need to reflect that. You can't always shoot for 1 to 5s and 1 to 10 payouts. And I've been probably, I would say, the last 5 years of doing this, I've really tried to stress that to traders. The hardest part for us is finding out how far a market's going to go and trying to figure out the market follow through. It's the hardest thing to do there is in trading. Ask anybody. That was the old saying. I think it was Paul Tudor Jones was said, nothing can prepare you for the last 25% of your trade. And that's exactly right. When our trades go way in the positive, do we wait there until our profit targets get hit, or do we pack it up, pack it in, and manage our money aggressively? That's up to you. That is up to you. But I can tell you from experience that when the markets get quiet and they flatten out, like they are right now, there's no two ways about it. Today's flat across the board. What's the big mover today? Gold futures? And even that's not accurate because you got the holiday lumped in there with that data. So Nasdaq futures, they're running those two things together. They're running last week and then this week together, and that's also messing with your equities open. So when they flatten out and they don't move, being conservative can really help you. Now, that either means cutting your leverage down and just sticking to your guns and shooting for your 1 to 5s and 1 to 8s or whatever your money management is, or maybe adjusting that down a little bit to try to not necessarily try to do that to build a higher success rate, but try to do that to survive. Anybody can trade trends. It's not hard. You just wait for pullbacks and you trade them. It's when the trends aren't there anymore and the market gets really dirty and it gets ugly. Then we survive. Then we get into survival mode. And if you can survive in these markets when they get quiet, then you're well on your way to becoming a professional, a real true professional. So this is a great time to be practicing that stuff. I expect it to be quiet this week. We're going to be here anyways. So that's pretty much about it for today. Forex Watch, RBNZ, I'm going to have that preview for you tomorrow. And then Wednesday, we're doing Trading the FOMC Minutes. That'll be our big stream for this week, so be sure to join us for that one. I'll give you a preview and get you ready to rock and roll for that. Fibonacci Retracement Workshop on Thursday by popular demand. A few folks wanted to see a workshop on Fibonacci's, so I'm going to go ahead and do that as well. And then Friday's strategy session, key level scalping. We're going to scalp some key levels on Friday. I'm not necessarily sure about the time on that one. I've got it listed for 1 p.m. Eastern, sort of late in the day in the UK. I may not do that. We may go on the open and see if I can scalp some key numbers successfully during the early open, but not much going on Friday. It's going to be a good day to get in there and maybe talk some key levels, talk some scalping, and see if we can maybe build a little bit on our knowledge base ahead of the weekend break. All right, guys. That's a wrap for me today. I'll be back tomorrow. Remember, if you have anything to ask me at all, head on over to howtotrade.com, subscribe for your free account, and then reach out. Send me a message. Tell me hi. Tell me what you want to do. Tell me what your goals are. If you have any questions, be sure to ask, and I will do my best to give you a rock-solid answer. All right, guys, that's a wrap. Packham, thanks, Shane, for your time. Absolutely my pleasure, Packham. You're welcome. Alec, thanks, Shane, for the insight and for your advice a week ago. Absolutely, Alec. Absolutely, Alec. That's what these streams are for. That's what these streams are for. They're an interactive trading experience. If you have a question, live streams are the time to ask them. All right. Ralph H., my pleasure. Ralph H., you're welcome. Okay, guys, have a fantastic trading session. As always, trade the action well, and we'll talk soon. See ya. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way,